Good afternoon to everyone that is currently tuning in live with us on another episode of Phillip Trading Podcast. I'm your host for today, and my name is Yong Shen. With me here today is my colleague Abigail, a dealer and marketing executive from Phillip Capital. How are you today, Abigail?
Hi, Yong Shen. Thanks for having me. I'm doing great. Yeah, thank you.
Good to hear that. So for today's podcast, we will be discussing on the topic, why has gold not performed better in 2022 despite high inflation and market uncertainty? So to our audiences out there who are currently investing in gold or interested to invest in gold, do not miss out this podcast. Once again, I would like to help all of our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. Without further ado, to our topics for today, why has gold not performed better in 2022? Gold, the classic safe haven asset, historically does well in times of geopolitical unrest and general market uncertainty. But why has gold not performed better in 2022 in an environment of rampant inflation and economic trouble? So my first question to you, Abigail, gold has a tendency to outperform in inflationary times. And now with these economic and geopolitical headwinds, we are seeing, why has the gold price dropped?
That's a great question. I think there are a few possible reasons for this. The first is the gold's relation with dollar. So I think the primary factor working against the rising gold price appears to be the massive turnaround we've seen from the US Federal Reserve this year. So after the US inflation reached about 8.6%, the Fed actually increased the interest rate by 0.75%. And this resulted in the dollar appreciating. So the age-old argument of the gold being in an inverse relationship with the dollar holds true now. And when the dollar gets stronger, the gold price historically fall. Yeah. So I think that the Fed might go for a gradual interest rate hike rather than an aggressive one, because this is to prevent tipping the US economy into a recession. Hence, the current negative impact on the gold price is because of the gradual rate hikes. Yeah, and I don't think it's a very aggressive one yet. All right, more aggressive tightening could lead to recession and could push the investors towards gold, all right, to encounter for the fall in the riskier assets such as equities. All right, so that's the first one. Second one, I think the gold prices are also demand driven. So gold is an asset, right, which inherently it does not yield any interest or income, and it is purely driven by the economic forces of demand and supply. Right. Normally, when people buy other asset classes, they do check the asset's future earning potential, right? Their cash flow generating capacity, the interest income for bonds, etc. But in the case for gold, the returns on it are driven purely by demand and supply. So one of the factors which may be causing the price of gold to be down now is that the demand for gold is not that strong among the market participants. All right. Today's gold investors are looking at a very different picture than they were at when they were at the end of the 2021. Okay, because now they have the option of earning higher returns from cash holdings, stronger dollar, or higher bond yields. So these assets have put pressure on the price of gold. Yeah. And then one more thing, lastly, I think is the impact from China. Okay, China is the world's largest gold consumer. All right, the demand for gold in China has surpassed its production by a wide margin many years ago. And I think because of that, China has started importing gold to fulfill the increased demand. However, with the COVID lockdowns and also the mounting debt bubble concerns out of China, this would likely be dragging on investor sentiment in the gold sector. Yeah.
Okay, so with your sharing just now, so can you share with us like how has the gold price tracked compared to other investments?
All right. For a gold price at kick off the 2022 this year, trading for around USD 1,800 around there. All right, and currently it's trading around 1,680. So that's down about 6.6% yield to date. All right, if you compare that right with the Dow Jones index, which is populated by the blue chip companies, Dow Jones has lost a good bit more. It's down about 20.5% this year. And for growth shares like the tech stocks have had a far more difficult run, right? With the Nasdaq index down 34.2% in 2022. And then lastly, we also compare it with Bitcoin because Bitcoin is touted as the potential digital alternative to gold. So the world's top crypto is down a painful 60% this year alone, right? So although the gold price isn't performing exceptionally well, but gold is still holding its value better than most asset classes this year, and also with its historically low levels of risk. Yeah.
Okay, yeah, that's great. So, sort of picture here where we are going with gold. With that as our backdrop, what are we thinking about for the remaining quarter of this year into next year? Or do we just have to have too many unknowns in front of us right now?
Yeah, well, certainly there's a lot of unknowns, and it goes back to the central question for global markets today. So are we seeing a Fed that is going to cave, right, as they are facing at a potential recession, all right? Or will this sticky inflation really going to force the Fed to keep the rates elevated for a longer period of time, all right? Or even worse, to whether they will continue to hike rates even as we are entering into a recession. All right, this last scenario, I would say, is probably not going to look good for gold, yeah. But what I think might happen in the short term is that gold prices are probably going to continue to sell off a little bit more, perhaps towards the 1,600 level, right? But as we look forward towards the medium term, I think it could recover. But we might even expect some rate cuts in the later part of next year.
Okay. So I see from here, like we have a really long history with gold as I think most of our investors use it as a hedge because it is a safe haven asset. So has any of this been eroded lately, or we think it still holds that position for us as the investors?
Okay, again, I think that it really depends on the regime at the Fed, all right? Gold prices are actually very close to the real rates, and that's really one of the main drivers here. So when we talk about gold as an inflation hedge, right? For example, that relates to the idea that as the inflation rises, right, if the rates stay constant, then real rates are actually declining, in which case that's actually positive for gold prices. Right, but as a safe haven, I would say probably that doesn't last for a very long period of time. So, and there's also no guarantee that gold will rise when stocks or bonds fall, just as we have seen this year. All right, so I wouldn't count on gold as safe haven for myself, but I think it is still a very good asset to hold in your portfolio, all right, especially for risk-conscious investors to diversify their wealth. Yeah.
Okay, great. Yeah. So thank you, Abigail, for your great sharing. And I hope it will help the new investors out there and to our audience who are interested to invest in gold, we are currently having a year-long promotion on CMEE Micro Gold, which means that clients are able to enjoy a super low brokerage rate of only USD3 per lot. So for more details, you can drop us a message on Facebook and our representative will get back to you. And now we have come to an end for our today's podcast. If you have any questions or any topics you want us to discuss next week, you can message in the comment box below. So thank you for listening to our podcast and happy trading for the week. Thank you for your time too, Abigail.
Thanks, Yung Shen. Bye-bye.